Hello everybody, welcome to the technical analysis webinar this evening. My name is Troy. I'll be presenting. As we get going, let's do a quick systems check if you would. Just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, thank you. I have enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please let me know. As always, keep in mind, no one trade is guaranteed to profit. There's risk with each and every trade that you take. So in some way, you should manage your risk, maybe using a stop loss or hedge positions, or you could use our special feature called AvaProtect, which is available on many of the instruments. But in some way, manage the risk that's there. The other side of that is each and every trade has a good potential for profit as well. That's obviously why we're here, to look at some ideas on how to hopefully maximize our possibility of profit. Keep in mind as we go along that what we cover is educational and not meant to be taken as financial advisement. Real quick, what is technical analysis before we get on the live charts? It's basically looking at the history of the chart. We're looking at the movements, looking at the patterns, trying to see if there are predictable movements that may be able to help us with future movements in terms of predictability. So, what happened in the past is not guaranteed to repeat itself in the future, obviously, but it is helpful to find patterns and specific price levels that seem important, that may act as lines of support or resistance. You can identify different trending movements and breakthrough movements, etc. And so those are the ideas we'll be looking at as we go forward, mostly using manual methods of technical analysis where we draw our own lines, find our own price levels, etc. You can make use of indicators as well, which can assist you with maybe identifying the timing of when to get in and out of trades. As we go along, if you have any questions, if you want to give any input, please feel free to do so in the chat box. Now, before we get into the technical analysis, I think it's important to get a feel for the sentiment of the day. And so sentiment is basically, what's the mood like? Is it positive, negative, or kind of in between? And today it's real easy to pick out the sentiment to understand what's going on. We just look at the basic headlines. Crude oil higher, strong tone following OPEC plus decision continues. So oil's been flying up because the OPEC plus nations have a policy stance that's good for oil price. Okay, so oil's been very bullish and climbing quite easily. We see over here a quick snapshot of the market when you look at something like this here. You see the futures market up huge. It's been up all day. You could see from this morning that the futures were green, US 30, US 500, and that's after yesterday's close of the Dow Jones, S&P 500, Nasdaq, all closed in the green yesterday. The futures were green all day. We look at the volatility index, otherwise known as the fear index. That's been down all day in a large way, over 8% down right now. The volatility and fear index down over 8%, and we see the dollar index strengthened. So how do you interpret that snapshot? Well, if the futures are green, and now the market opened green as well, this is actually today's numbers on the actual market. I should take that back. Yesterday's numbers were green, but today's market is already open. So this is today's numbers, which are green, matching the futures market, which is solidly green. So when you see green all day, especially in the futures market before the US market opened, and you see the volatility index is the opposite, red, meaning fear is down and the markets are up, and the US dollar is somewhat flat, not strengthening too much, that typically means positive sentiment. Okay, that goes with the headline, crude oil higher, strong tone. You look at the next headline, Wall Street jumps after sell-off as big tech bounces. So there was a sell-off recently, but today the headline was Wall Street is jumping. Another positive headline. We look at announcements that came in earlier today. Out of the European Union, PMI numbers better than expected. Out of Great Britain, PMI numbers better than expected. And out of the US, PMI numbers better than expected. Okay, so we see the non-manufacturing PMI in the green. So across the board, positive announcements coming in, positive headlines. The lone negative headline here is about China's property sector, this Evergrande entity really having some problems with defaulting, etc. So the lone holdout here out of the positive sentiment could be China here. So that's something to keep in mind, maybe with the Australian dollar, if you're looking to trade on it. Could be a bit weaker because a lot of their exports go to China, and many say as China goes, so goes the Australian dollar. So it's something that might be a little iffy to trade on, as you have a mix of positive sentiment, but the Australian dollar having some reason still maybe to be a bit negative. Okay. So that's all it takes, 5-10 minutes. You got an idea of the sentiment. Now, you have your options where to trade. You can trade on the MT4, MT5 platform. You can trade on our web trader platform, our AvaTrade Go app. I mentioned a feature called AvaProtect. For those of you who would like a little assistance with your risk management or to make your risk management faster to set up, it makes sense to use our home-built platforms. You know, if you go to trading platforms here, you go to AvaTrade Go with your mobile app or with your mobile device, you can download the AvaTrade Go mobile app from either of the major app stores, and it trades right on top of your MT4, MT5 accounts, and you'll see features like if you program the take profit and stop loss, it calculates your potential profit, your potential loss for you before you buy or sell based on your trade size and the price you put. AvaProtect is a special feature that if you put that onto the trade, it protects against any and all losses during the protected time period for a small premium cost. So you have all of these extra features if you use our mobile app or our web trader platform, and the trades you open, you'll see on your MT4 and MT5 account still. So not to worry about that. It's the same account, and those trades will show on the other platforms no matter where you open them from. And so, you know, if you log in from up here on our main website, then you're in the web trader platform, which, by the way, works from mobile and from your PC or Mac. So very, very cool platform with lots of nice, easy to use features. And it has, if you go to one of the instruments like gold, silver, or FX pairings, you'll see that, and you see how easy it is to search for an instrument. It's got a nice search feature. Whether you're buying or selling, if you're on an instrument that gold, silver, or FX pairings, you'll see AvaProtect. And so very simple to use. You can protect by the hour, you can protect by the day for a small premium cost, and your profit potential can still be very large. So AvaProtect is a nice risk management tool. If you program your take profit, your stop loss, it shows you, as you see here, your possible profit, your possible loss, which adjusts as you adjust the trade size. So you can have full control of risk management using these features. So very cool features, easy to use. And since we're talking about technical analysis in this webinar, if you want some help with your technical analysis beyond the webinars that we're doing, if you go to Trading Central in the web trader platform, if you go to something like analyst views in these premium features, which are free, by the way, they're on all of the live accounts, you've got free signals here. It breaks down the price levels, where the support level is, the resistance level, what direction the move is expected to break out, where you might want to enter and exit. It's all broken down for you here. And so whether you're trading cryptocurrencies or standard FX pairings, you've got signals on all of that. So, and the technical analysis broken down for you. So very cool free features that can speed up your technical analysis as these signals come in throughout the day. Now, let's go ahead and jump on the MT4 platform. We can take a look at some things that have been happening here. We see the euro actually, if we're looking for some opportunistic entry points, we see the euro has dropped quite a bit against the Australian dollar. So we mentioned the Australian dollar has mixed signals here, right? It has reason to be strong because overall the economy and all of those economic numbers look great, and Australia being an export nation of coal and iron ore, as the economy goes, so goes Australia, right? Because they're exporting all of these things that will have higher demand when the economy is doing good. So we understand why the Australian dollar could strengthen, but then we can also say you might understand why there might be some limit to that if China's having some issues. So if we're looking at something like Euro Australian, we look at the one-day candles, we can say, wow, look at this support level right here on the one-day candles. Support here, and then it went up. Support here, and it went up. Support here, it went back up, and look where we are, bouncing off the support right now. So something like the Euro Australian, technically speaking, this looks like a great entry point. So maybe based on both fundamentals and technicals, maybe I decide that I want to buy on this. And, from a purely technical strategy, I can say, wow, look at how little my risk is to get below the one-day candle support. Support, 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 support. If you're wondering, well, what's a support level? Depending on how new you are to trading, it's a price level where the price has trouble breaking below. It hits the price and goes back up. It hits that price and goes back up. For some reason, the price is supported and doesn't break below there very easily. And so we see it used to be resistance at this price level over here. Resistance, resistance, resistance. Once it broke past this area, then it became support, support, support. And that's usually the way it goes. Old resistance becomes new support and vice versa. Now, it doesn't mean it can't break the support. If it does, you could see a huge plunge even further. But for now, we're seeing that it didn't break the support. So for a small risk, we can get below the support level with our stop loss, and we can put our take profit, maybe before the first major resistance level up here. Okay, and we'd say, wow, we've got profit potential 2 or 3 times what we're risking. And if we go to 4-hour candles, we can zero in on where would we want to take profit. We can see there's resistance here on the 4-hour candles, resistance, resistance, and down. So if this is going to truly reverse and come up, it might find some trouble here trying to break any higher than this resistance, where it hit and went down, hit and went down. So the scalper would say, hey, if it breaks my support level on the one-day candles, I'm out. If it bounces, I take my profit just before this resistance level up here. Okay, the technical analysis on that's on our side, and perhaps the fundamentals are on our side as well. All right, so let's take a look. I think I answered that question, Arthur. You're asking what entry do I see for the Euro Australian? When you look at the one-day candles, there's a support level there that could be on your side. It easily could break it. Okay, that's why we limit our risk. But when we look at the one-day candles, it looks like a nice entry based on this support level here. Okay, small risk, bigger potential profit. All right, now we could look at something like crude oil, and we talked about this last week. We said, boy, oil could be an opportunity because we know Goldman Sachs said they think oil could hit 90 a barrel this year, right? And oil had dipped down because of some fears that it hit the market in China. And wow, look at it from last week. Look at where oil is at now, almost to 80 a barrel. So that was the fundamental analysis last week that we were looking at, and boy, did that come through. So anyone that was long on oil these past few days, you're way in the money. Now the question is, okay, is this a good entry point to still buy on oil? And maybe not. It's already gone flying up. We have to go to 1-week candles to try and find a resistance level, and it broke that resistance. Go to 1-month candles, that'll help us out. And we say, here was the resistance level right here. Okay, we drew that a while back. There's the resistance where it hit on the 1-month candles and dropped. And so it's been since 2018 since it was above this price, or since it tested this price. And now here it is above there. So now we have a support level down around 77. Okay, that's the new support because oil just broke through the resistance, which was right around 77. Now we're up above that resistance, and so that should act as support. So you might say it's too late to buy when you see this type of spike, but honestly, this line right here, this red line, is your new support. It broke above there. So, if this pulls back down towards 77, that could be a spot where a buy limit pending order could make sense. Technically speaking, 77-ish is the new support. So if you don't want to buy now, but you feel bullish on oil, okay, so maybe it pulls back. You could have a pending buy limit down here around 77.25, right above that 1 month candle support level, as it should be now. So if you get a pullback in oil, that could be a spot you might look to enter around 77.25. If you don't like buying from the high point, but you want to buy an oil. I'm not saying you have to buy an oil. You obviously could short it, but the technicals show you it just broke a huge 1 month candle resistance level that it hadn't been above. If we go back to 1 month, it hadn't tested it since 2018. It hasn't been above it until now since 2014. It didn't break above this price level since it broke below it right here. And that was back in 2014. So we're talking, it just broke to a 7-year high, breaking above 79. So this is something that you say, okay, that's a huge price breakthrough right here on the 1 month candles. And so then we say that should be a major support level. It would take something huge to break back below that price level, you would think, okay? And what do you think happens if the U.S. passes infrastructure? More demand for oil if they pass an infrastructure stimulus and a huge budget that they're trying to pass in the U.S. If that happens, you could see an even bigger surge on the price of oil, potentially, right? So in that regard, you might say, oh, well, I don't even have to wait for a pullback. I'll just buy on oil now. And by all means, you could if you wanted to. But that's what we're looking at on crude oil right now. If we look at gold, gold tends to drop as the U.S. dollar strengthens. The U.S. dollar's been a bit bullish today. But what do you think could happen if the U.S. passes a big infrastructure deal? If they can get through $1 trillion in extra stimulus, what do you think happens to the strength of the U.S. dollar? Okay. Hola, you're saying you're brand new to trading, and a lot of what I'm talking about is too fast for you, etc. We do have beginners webinars that go very, very much slower. Okay. I do try to be simplistic anyways, but feel free to ask specific questions. If you're missing something, if you want something repeated, please tell me specifically what you would like repeated. But in terms of the pace of what we're doing, we're going to go through a number of instruments to get some repetition as well, okay? All right, so in general, gold tends to be a safe haven against inflation. So if the US dollar is strengthening, gold tends to drop. If the US dollar is weakening, meaning the price of goods is rising, then gold tends to go up. And what we saw today was the PMI numbers out of the European Union, which we just took a peek at. We looked at the schedule as we were getting a feel for the sentiment. We saw that the PMI numbers, the Purchasing Manager Index numbers, went up in the European Union, in Great Britain, and in the US. So that means prices went up for purchasing managers. That's what the Purchasing Managers Index shows. So, businesses that are buying raw materials to build things, or factories that are buying raw materials to build things, and businesses that are buying products to sell, the prices went up across the board in the European Union, in the US, in the UK. So if prices are going up in those areas, that's a sign of inflation. All right. So if those PMI numbers are up all across the globe, then perhaps inflation fears might kick back in. Okay. So that's how you would read that. If prices are rising more than expected, and that's what those numbers showed, then you might expect gold has a reason to climb. And that's why when we look today, let's say 30-minute candles, we see gold spiked. Gold was down here around 1746, and now it's up $13 an ounce to 1759. Okay, so we understand then what happened as gold spiked off of this support level. Okay, we saw a rise in gold already back here, and then it established support here. Support, it hits this price and bounces. It hits the same price, bounces again. It hits that price today, bounces again. So this is a nice support level now on the 30-minute candles. And what is supporting the idea that this price level might not break is the fact that we saw an increase in the purchasing managers index more than expected in several large economies around the world. Okay, so fundamentally we may respect this support level on gold, and then we take a look and we say, according to the technical analysis, where would I want to get in? Where would I want to get out? And the answer is, well, it depends how picky you are, right? If you believe that gold will go up, but you'd like a better price, then you could put a pending order down here to buy, right above the support level. And so maybe I show you an example of how you would set that up. So if we just go on gold to pending order, and you have 4 types of pending orders. The buy limit pending order buys from a lower price. Okay, so if gold drops and you want to buy from say 1750, then you do buy limit. You put the at price at the price you want to buy. In this example, 1750. Maybe I'm willing to risk $10 per ounce. So I put my stop loss at 1740, and my take profit maybe I think should be up here around 1770 at the resistance level. Okay, and so then I put that pending order in. So now I'm hoping with this concept that the price will pull back towards the support level, so it opens my buy position. Then I'm hoping, like it did here and here and here, that it bounces off the support level again, and I've got my take profit right up here at the resistance level. And maybe I want to cheat this down just a little, so my take profit is just before that resistance. Okay, and my stop loss maybe doesn't need to be down so far, just so it's below the resistance or the support level. Okay, here's my support. So I've got my stop loss clear of that, just below, and I've got my take profit about 3 times the potential profit compared to what I'm risking. So if gold indeed does pull back down, I can get a better entry point from which to buy if I believe gold should be bullish. So right now the US dollar has been a little bit strengthening today. So maybe it can pull gold down to that support level again. And if that's the case, maybe then you can get a nice buy position if you believe gold in the bigger picture should go up because of these higher than expected PMI numbers. Okay, so that's an example of preparing a pending order based on a technical support level that you're hoping you can get closer to before buying. Okay. Yes, we can take a look at the Nasdaq. Someone's requesting that. So US Tech 100 is the Nasdaq 100, US Tech 100. And we see here's the bullishness. Up goes the Nasdaq, okay? And many times the indices go flying up in expectation of a weakening USD. And so this could be a sign that maybe gold is expected to climb too. Many times that happens in unison as the US dollar weakens, you see indices and gold go flying up with a weaker dollar. So we'll see if gold continues its climb. If that's the case, if you think gold could continue to climb right now and not come back to the support level, then maybe you have both, right? Maybe you have the pending order on gold in case it pulls down. And then maybe you also say, I'll take a market move on gold and buy right now. Okay, in which case you're risking more to get your stop loss below the support level, and your potential profit is less to the resistance level. And so that's the choice you make. as a trader, right? Do I want to enter now? Do I want to wait for a better price? And those exact methods that you use, obviously that's up to you, right? But that's how you'd set things up either way. So as we're looking at the Nasdaq, we understand why it went up. The tech stocks recovered largely today. There's optimism on the market. We looked at all the headlines showing positive economic numbers, PMI numbers higher than expected, etc. So we understand why the Nasdaq went flying up. Now the question is, what happens now? Because it's at a major resistance level. Okay, we're looking at the 30-minute candles. Yesterday, or I shouldn't say yesterday, but late. Actually, it was yesterday. It was yesterday. We see the market hit this price and dropped. Okay, we see down here it's the 4th. So that was yesterday. And we're seeing that when it hit that price, boy, did the Nasdaq plunge. Okay, then we see we're at that price level again, and it's trying to decide, well, what's going to happen here? Is it going to break through or is it going to drop? So it certainly doesn't look like it's reversing immediately off of that price level. We see it's testing, testing, testing. It certainly has not dropped. So is it the most opportunistic price level to buy from? Probably not. But if it breaks above this resistance level, as you see here, it used to be support, support, up, support, up, support, up, and then it tested this price level, and once it went below, it plunged. So now it's at that decision point. Is it going to break above it and go up, or is it going to respect this price level and drop? Right now, it's not dropping. We can see it's testing this price level. So if it breaks through this price level, you could see a further climb up. What kind of pending order would only buy if it breaks above this price level? Does anyone know? Correct, a buy stop. If you wanted to program a buy stop pending order to buy from up here, the idea would be you're waiting for it to break the resistance before buying. Then you would program to buy from a higher price up here. Okay, because it's testing the resistance. Intuitively, many times, traders don't like to buy from high points, right? You like to buy from a low point. But the idea of buying from a high point is confirmation of a broken resistance, confirmation of a continued uptrend. So the buy stop would be if it breaks this resistance point and gets above this old support level, then you buy. And so you could program a buy stop to buy from somewhere up here, maybe around 14,750, something like that, okay? So, yeah, many of you are saying buy stop, correct? So that's up to you. The news is positive today. You could program a buy stop to buy from above this resistance. Some of you might find it tough to buy after that strong of a climb. Maybe you wait for a pullback, but the opportunity's there. If it breaks that resistance, you could see a continued surge upward. If we look at something like the Australian JPY, we see, wow, look how high the Australian went, right? Why did it go up? Because of all those positive PMI numbers creating more global demand for Australia's exports. Makes sense. But at some point, there's a limit to how far and how fast the Australian dollar can climb if there's still problems out of China, okay? So it just depends what's going on overall with other areas. If I go to the one-day candles, I don't see resistance here until it gets up here, okay? Resistance, resistance. So this could continue a climb until it reaches a higher resistance level. So maybe you preemptively say, okay, if the Australian dollar keeps climbing against the yen, I'll sell from this resistance up here, okay? From the resistance I see here and here. And so you could program a sell limit from a higher price up here, say 81.75, something like that. So an example of that strategy would be a sell limit, pending order. Sell limit would sell from a higher point. If it reaches this resistance point on the one-day candles, maybe you cheat it down just a little bit to get near this resistance level here. There's resistance here on the one-day candles, and then a higher resistance up here. So maybe you compromise and you say, okay, if it gets to 81.55, then I sell. And then your stop loss maybe is above the next resistance. So at price to sell, in this example, 81.55. Stop loss above the higher resistance, 81.98. So let's say 82.05, 50 pips up. 82.05. Stop loss, take profit could be down to this support level down here. This old support, and then it broke through. So this should act as support here potentially around 80.20, okay, for a take profit. 80. We could say 25, okay? And so there's our pending order, ready to sell if the price comes up to this resistance level here on the one-day candles, which was an old support that broke through and became resistance, resistance, resistance. It temporarily broke above that resistance and right back down, and now it's approaching that first resistance level. And if it breaks it, then we've got a stop loss a little ways up, okay? Let me go to the 4-hour candles. 1 week. Let's see, where did I put my stop loss? I want to be able to see it. Sell limit, stop loss. Oh, I didn't get the stop loss programmed. Let me go back in, modify. Okay, stop loss 82.05. I know I thought I typed it. I must have somehow deleted it. 82.05 for the stop loss. Modify. Okay, there we are. So now I've got my stop loss if I go to the one-day candles. Just above the one-day candle resistance, the upper resistance. So it would have to break if I enter on this. If it hits our entry price at this resistance level, in order to lose, it would have to break the one-day candle resistance here and go up and break the one-day candle resistance here in order to hit your stop loss. And in order to win, it would just have to drop near the first one-day candle support. It doesn't have to break any support levels in order to take profit. So that's where the technical analysis is on your side. You've got two resistance levels in your favor, and maybe I slide this up just a little bit more above the one-day candle, the second resistance, so it's clear of those wicks. And my potential profit is about 3 times what I'm risking. So again, technically, this is an advantageous setup, and fundamentally, maybe there's some fundamental news on our side here that things aren't all rosy all around the world, that the Australian dollar necessarily should keep climbing against a safe haven like the yen. Cameron, I'm not understanding your question. You said stop loss versus sell limit. So the sell limit is the name of the pending order that sells from a higher point, which is what we prepared here. If the price goes up to our entry price, it will sell. That's the sell limit pending order. The stop loss is up here. It's our risk management on the sell limit trade, okay? And if I accidentally said sell limit instead of stop loss or stop loss instead of sell limit, then I apologize if that's what you mean. Okay, but the trade type is sell limit. It's a type of pending order. The stop loss is our risk management that we're using, that if it breaks through these two resistance levels, then we give up with a limited risk, with a much larger potential profit. And for that matter, you also could say, you know what? I'm just going to sell also with a market move on the Australian yen. And I'll put my stop loss on this one only above the first resistance level, so I don't risk as much. And my take profit may be near the same spot as the pending order. Okay, so you take a shot with a market move if you believe in it, in this idea, and but with only one resistance level on your side because you're not taking as perfect of a price, and you have a pending order in case the first one goes wrong, you can get in at a better price. Okay. Razwana, good question. Yes, all of the webinars are recorded. And so you can go to our YouTube channel by tomorrow, sometime in the morning probably. This webinar will be uploaded to our YouTube channel, and you can watch it to get a repeat of the strategy concepts. So even though the movements aren't relevant anymore necessarily in terms of trading on these exact instruments, the concept is still relevant. So good question. Yes, all the webinars are recorded and you can go back and look. So you can see I'm diversifying. I'm making some market moves. I'm making some pending orders for better prices in case the market moves go wrong. Some instruments maybe you don't trade on unless you get a better price. Some instruments maybe you're ready to trade on now. So I'm giving you a variety of ideas, and all of them are based on opportunistic entry points, based on the technical analysis, and also somewhat based on the fundamental news as well. Okay, combining the fundamentals with the technicals. I think it'll be interesting to take a look here at some cryptocurrencies, because there were some huge movements today. For those of you in an area of the world where you're able to trade on cryptocurrencies with us, there are some areas where the regulations don't allow it, like the UK and some other areas, but many of you do have cryptocurrencies available. So if I want to trade, let's say on Bitcoin, we could take a look and say, wow, Bitcoin was bullish this past week. Look at the green candles, up, 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 up. And we drew this support level a week ago. We called this in the technical analysis that this was an old resistance that had become a support level. Once it snaked past this level, the old resistance from back here on the one-day candles, it snaked through that price and broke above it. Then it became support here, support, 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 and up it went. Okay, so technically speaking, that was a pretty easy call to see that this went flying up. Now you look at it and you say, well, what do you do now? It's at a high point. So if you're bullish still on cryptocurrencies, but you don't like the entry price, then again, you start to say, okay, where are the support levels? If it pulls back down, where might I want to buy from? So here's a support level right here. Okay, you see here on the 15-minute candles, it was resistance. And then it broke above today and it became support, 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 support. Okay, so if this pulls down here, this could be a spot. If you're bullish on Bitcoin, can be a spot you might consider buying from, somewhere right down here, okay, at this price. If you're more bearish on the cryptocurrencies, because China's really been cracking down on the cryptocurrencies, it seems like that's been brushed off with all the climbing this past week. But if you are bearish on the cryptocurrencies, if you feel they should drop back down, then you could put a pending order right down here. If it breaks below this support level that it established today, then that establishes a downtrend, then perhaps you have a pending order to sell and you could take profit at the next support level. Okay? Those intricacies are up to you. I certainly could say, you know what? From a technical standpoint, let me sell on Bitcoin. And if I'm selling on Bitcoin, I'm putting my stop loss right above today's high. Okay, there's the high, resistance, resistance, and then down it came. So my stop loss is above the resistance. My take profit is at today's, just above today's support level. If it gets near the support, I take profit. If it breaks today's high, I get out. About equal risk to reward with that type of setup, right? And you know, that's up to you. It's not a position necessarily that I like that entry point. I was showing an example of what you might do. Many traders might say, you know what, I'll use pending orders. If it gets near this resistance up here, I'll sell. If it gets near the support down here, I'll buy. If it breaks the support, I sell. Okay, so you can put in 2, 3 pending orders based on these price levels. Okay. Ola, yeah, you'll see both the fundamental analysis webinar and the technical analysis webinar titles are on our YouTube channel. So you will find them there. Okay, so This is an example of the cryptocurrencies. Looks like after an initial surge up today, we've got, this is called a ranging movement. It's ranging. Support, it goes up, resistance. It comes back down to the support, goes back up to the resistance, comes back down to the support, headed back up to the resistance. That's a ranging movement. So in a ranging movement, you can sell from the resistance and buy from the support. So you could have two pending orders programmed, a sell limit from up here and a buy limit from down here with limited risk and limited risk to your stop losses on either side of the support and resistance. And then you could have a third pending order if it breaks the support to sell. Okay, just some ideas there, technically speaking, to take advantage of this ranging movement right now in Bitcoin. Selling potentially from the resistance, buying from the support if you don't like the current price, which I don't really like the current price. I would rather wait until it's closer to this resistance to sell with a sell limit pending order, or if it gets near the support, buy with a buy limit pending order. And then you have your stop loss just below or just above those price levels with limited risk and larger potential profit. Any questions before we wrap things up this evening? Yes, it looks like the simulated trades we did here are starting to turn the right direction. We'll see how they turn out. I'll let those run. We'll look at them maybe on Thursday when I do the afternoon webinar. All right, everybody, thank you for joining. This is a good spot maybe to stop. You could look at setting some pending orders or market moves on Bitcoin if you're able to trade on it, or some of the other cryptocurrencies as well that you might be interested in, Ethereum and some of the others. Desroy, you're asking about AvaTrade Go. How to find AvaTrade Go, is that what you're asking? You would find it right here. Let me go back. You find AvaTrade Go on our main website. You go to trading platforms and then AvaTrade Go. And it takes you to this section where you can download it from the major app stores. All right, everybody, thank you for joining. You're very much welcome. Good luck with your trading. I think you'll find some nice, potentially ranging movements on the cryptocurrencies and some of the other instruments we looked at. I think you'll get some good price action as well. All right, everybody. Good evening. Good luck with your trading. Till next time.